What's going on, you guys? It's Thursday, October 6th, 2022, and daily episode log number 24. Pretty crazy how far we've come, right? I honestly didn't expect to get this far, but I'm enjoying it. I enjoy helping you guys out. It's been an amazing day filled with amazing responses and a lot of love, a lot of appreciation. So I really appreciate all you guys, seriously. Um, it was my goal and my intention to just give back through my personal experience, and you guys are just watching my personal journey as it unfolds right here with me. So it's a very cool experience. I really do appreciate all you guys. So let's get into the trade that I took today. I was able to profit today finally. I know this week has been a little difficult and hard to navigate, but nonetheless, the model works and will be fine soon. That's a famous quote from ICT that keeps me grounded um, through times where your model isn't forming. And looking back on the week, Monday was the only viable option for us, or at least for me, regarding my model, the YouTube model. And besides that, it was only today, and I was able to profit almost like 20 points. I'll break down exactly what happened. You can go over to my Twitter if you want to check out the executions and the exits, and then the profit as well. I posted on my community tab. I don't do that to be boastful, guys, or egotistical. So please, I only do that to inspire people, truly. And I do that for transparency wise, because I know a lot of people follow other mentors and other people that, they don't post a lot of transparency. And, I said I didn't take any trades this week. And I just wanted to make sure that, you guys do know that you guys are following the right person. And I walk the talk. So let's go into the daily chart. There isn't too much to talk about. I ended up going long today, even though we ended up going, we closed bearish, but something tomorrow, I'll go on lower time frames. Pay attention to the relative equal highs tomorrow. We do have a small bullish fair value gap here, but like I've been mentioning, ooh, I really like that. The weekly candle respecting this fair value gap. I'm only looking for shorts. I'm not trading tomorrow, but tomorrow I'll be just reading price action and seeing how it reacts after NFP. I'm going to be looking for a wild seek and destroy day. I think that we are going to run out buy stops and then run lower. So it'll be interesting to see how it plays out. Keep this weekly time frame for value gap in the back of your mind, because this will be the catalyst if we are truly, truly bearish. Daily time frame, like I said, there isn't too much to note. We didn't trade up into this fair value gap just yet. 4-hour time frame. Let me take this off the 4-hour. So this was my annotations from yesterday. Already went over that. There wasn't much to note here on the 4-hour when I was looking at it. I was just really looking at the buy side liquidity here and then what I've been mentioning here. Looking at the 1-hour, this is where you get into the, I guess, the criteria to why I took this trade and the backbone to why I took the trade this morning. So coming into New York session, overnight, we dropped down into a discount relative from this dealing range low to the dealing range high. So we dropped down into a discount, which is really good for us to start looking for longs. We drop down into our fair value gap here. Let me do this real quick. So your 1-hour chart will give you that structure to the model on lower time frames and give you that narrative. The narrative for me going into New York session was looking at these relative equal highs and seeing if we could come up into there. I'll touch on why I took partials and why I did what I did. So we came into that discount. We came into this fair value gap, respected it really nice. And what else is there? We have our down close candle here, which is our bullish order block. So these things alone set up if you were just trading, let's say on a 1-hour time frame, you were taking your trades based off the 1-hour, that could be your entry pattern technique, right? If you went to equilibrium of the fair value gap right on top of the order block, and you could have been targeting the buy side liquidity there, That could have been your setup. Now, the cool thing with the YouTube model, this happened overnight, so I wasn't able to get into the trade. So I jumped down into, I believe it was way lower even than the 5 minutes. So I was looking at this coming into the open of today. Let me go ahead and replay button this. Where is it? There it is. Because this will help give a perspective. So coming into New York, let me actually reel this back. I'm not sure. There we go. So off the context of the higher time frame, right? The 1 hour fair value gap, the lines are still there. The bullish order block. You see price displacing really, really nicely. Okay. Now price comes down into a discount relative from this dealing range low on the 5 minute to the dealing range high here. Okay, so we're inside of a discount. We reach into this fair value gap here. I was actually paying attention to this order block as well. I was hoping that maybe we tapped into it before going higher. And then we displaced higher here. So let me jump down to a 1 minute or a 2 minute, because this is where the bread and butter starts to happen. So if you're looking at a 1 minute or a 2 minute, this is the YouTube model. We take out, let me delete this. We take out the sell side. We displace higher. We have a market structure shift here. Okay. Now we're targeting the buy stops resting above here, and then on the 1 hour time frame, we know in the back of our mind we're looking for those relative equal highs to be taken out. So you see price displace higher. We have our market structure shift. Next thing that I'm looking for is a dealing range low to dealing range high. I'm looking for a fair value gap inside of that discount. What is there? A fair value gap resting right here on the 1 minute. And if you look at the 2 minute, fair value gap is right here inside of the discount. This is actually the time frame I entered off of, was the two minute time frame. I watched it come into it on the 1 minute, saw the 2 minute, and I entered probably right about here. 3 minute, fair value gap here. 4 minute, fair value gap. 5 minute, no fair value gap, which is okay. If you see and you know your bias and your pretty strong indication, and you see 1, 2, 3, 4, and even 5 fair value gap, they're all layered in the same exact area. That's such a strong indication to me. It's such a strong indication from my studies that this is a high probability. And it's funny too, with intuition over years, throughout the whole week, I never had a good feeling about price. I never had that certainty, that just gut feeling. And it's something that you can't really describe, but it's this gut feeling that it's a distinguish between confidence and like delusion. But for me, it was just really confidence. I could just feel, and obviously the criteria, everything matched, but you can just feel the difference between setups. Like when when you're entering in a wrong trade, like in the back of your mind or in your gut feeling that this is not the right trade. And when you're entering into a good trade, you have that good feeling. So try to pay attention to your intuition. I'm not saying it's an end all be all, but it can help you kind of figure out if it's a good trade or not. So little side note there. So I entered in here. I think it was right here when I was looking at the 1 minute. I took my partials at right above this high here. You can see that on my Twitter post with the entries. And then I was watching price displace higher. And you guys know my rules. So I was up about 20 points, and I think I was about 75% of the position off already. And I was pretty confident that we could possibly run to that buy side liquidity on the 1 hour, the relative equal highs. But I also knew in the back of my mind, it's NFP tomorrow. Price is more than likely going to consolidate, and they're going to leave liquidity. They're engineering liquidity on both sides of the market. So tomorrow it's more or less going to be a seek and destroy day. So I knew that in the back of my mind. Okay, I don't want to be greedy here. I want to get in, get out, get as much as I possibly can. If I can leave a runner on, that's great. So once we were already up here, I moved my stops to break even. 75% of the position was off. And that's how a real professional manages his money. I'm not sitting here and I posted that, I could have, and this is, just from old experience, my old self, I would have left this position on. I would have left it, maybe I probably would have moved it to the break even, and then price would have came back and stopped me at break even because I had an ego and I'm trying to, get my target, my profit area that I was looking for. And I end up losing all the profits that I just had. So you're either going to learn through experience or learn through other people like myself telling you to take profits, telling you to pay yourself, because it's going to bite you in the ass one day and you're not going to like it. It's not a good pill to swallow. I've learned it too many times to not do that. So when I was watching price and my stops were at break even, this is a little tip, even to go along with entries, or if you're in a position and you're watching price and seeing, is this valid or not? I'm watching to see how it reacts to bullish fair value gaps and bullish order blocks or any bullish PD arrays. So I watched it drop down into this discount. I think even on the 2-minute, I was paying attention to this fair value gap and this order block here. And it was just a few points away from hitting my break even. And I was really just hoping that we expanded higher from here, which we did. We expanded into this bearish fair value gap. So once we closed up here, I'm now watching this. I'm watching and hoping that this doesn't react bearish, because that would indicate that obviously we're not bearish. So we closed above this fair value gap. Okay, now I'm looking at this high and possible higher targets. So then price dumps. I knew immediately that I was going to be stopped at break even. And I was out of my position, which I'm totally okay with. I made more money than I would ever make at a job. And I talked about how your discipline really rewards you. Like when you follow your rules, you follow your model, you follow your criteria, it will pay you. You have to trust it. You have to trust your model so deeply, even when times it's not appearing, even when it's failing. And I'm only saying this, if you have a flawed model, then obviously you need to make some tweaks to it. But if you know your model, you've tested it, you've forward tested it, back tested it, and it works over time, there's going to be weeks like you've seen this week with me that, you know, sometimes the model doesn't form every single day, and sometimes it only forms once a week or not even once a week. So you have to trust it so deeply and just follow those rules instead of, trying to jump different models and try to jump different entry pattern techniques. This is all going to mess up your consistently profitable equity curve. You want your equity curve to be a smooth up, small little retracement, up, small little retracement. That's how your equity curve should look. It shouldn't look all over the place. And that way, if you're sticking to one model, one rule set, you can start to find out where your flaws are at, if it's in the model or if it's in yourself, and then you can start to narrow down what you can perfect, and things become easier. Like it's pretty crazy over these last, I'd probably say 6 months where I've really have found consistent profits. Um, it's like riding a bike. At first, all these concepts are so difficult to learn. I remember just staring at ICT videos like 3 years ago saying, what the hell is this? If you guys don't really know my story, I haven't talked about it much. I've been trading for almost 5 years now. I found out about Forex when I was in college, and I was kind of just drifting through life, like many of us. And I got brought this opportunity. It was through, if you guys know what iMarkets Live is, it's now called IM Academy. It's a network marketing company. So I got recruited into that, and I ended up dropping out of college. I went back home with my parents, and I was just consistently grinding, but I was learning retail. I was trading trend lines, Elliott waves, EMAs, harmonic patterns, you name it. I've traded it. And I was trading that for like 1 to 2 years. And then I stumbled across smart money. And it wasn't even through ICT, it was through some other person that was basically reteaching what he taught. And from there, I ended up finding his leaked core, what he's posting on YouTube right now. I'm sure a lot of you already had it before he even posted it. And he designed it that way. And then last year in 2021, I entered in his mentorship. And from there, it's been smooth sailing, to be honest. I mean, not really smooth sailing, but last 6 months been really nice. So if you're in those stages of development, just keep going. I know it can be difficult, it can be hard when you're losing and you see other people profiting and doing well, and you're like, man, what am I doing wrong? You're not doing anything wrong. It's just part of the learning curve. It's a long learning curve. This, no matter how smart you are or how much time you put into it, like I'm a very fast learner and an extremely hard worker, and this still took me almost 5 years to like finally get it in the light bulb to finally click. So for those out there, just please keep going. It is a tough journey, but it's so rewarding in the end. I promise you. And I think that's going to be it for tonight, guys. I will touch base with you tomorrow. Until then, good luck and good trading.